Good morning to all traders and welcome to this Tuesday's Market Insights video provided to you by Orbex Studios here. Today I want to start with oil and also gold. We're going to go a little bit earlier this week, earlier compared to where the EIA is coming out, and this is for a number of reasons. First of all, the biggest loser yesterday was the oil market, so it is a big mover indeed. And for that reason, it's good to have a quick look what's happening in the price of oil. Now, the price of oil fell for three reasons, okay? But we also have two very significant events happening today, and we need to really look at our technicals in order to be able to identify some opportunities. Right now, oil moved down yesterday for three reasons. Mexico, they are actually reopening following the hurricane Delta. So production is going to increase from Mexico. There is increasing calls, also increasing headlines that Libya is going to reopen again. That will increase production. So it's also deteriorating, actually affecting the price of oil negatively. And third, Norway, they were on a strike. Now that strike that had crippled oil and gas production in general, they're going to by ending this strike, obviously, we're going to get hundreds of barrels of oil on a daily basis coming back into the markets. Now, today specifically, we have the World Energy Outlook for 2020 from IEA in a few hours' time. The event is live also. You can watch it online. And we have the Orbex monthly outlook. And with demand really crippling, it might be very, very interesting to see how markets are going to perform from today onwards, okay? And on the gold markets, of course, we do know that markets are really, they're quite volatile before the election. Obviously, there is a Biden win on the spotlight for some of the investors. The thing is that there is still high uncertainty around the stimulus package. Is this going to be another one coming before the election or not? After the election, we're most likely going to see something coming in anyway, but what's going to happen before the election? Gold prices are to remain volatile in my opinion, at least until the next debate, where it might get a bit more clarity. Then that's why I'm seeing a little bit more downside for the prices of gold, right? Now, without further ado, in the oil markets, I'm looking at this as a flat, right? You probably haven't seen this scenario playing it from many analysts, but here it is. We have these levels like really respecting their limits over here, their barriers, right? So now that said, I'm looking at this as a wave 4, right? Which means we're going to get another wave up 5. Now, since this can be, it's not really looking impulsive. We've had this 1, 2, 3. I was expecting a 4 and a 5, to be honest. Since we missed this and we came down here, now that means that we have a 3 up here. Since we have a wave 3 up here, I'm looking at this as an ending diagonal, okay? Corrective ending diagonal. So, well, ideally, what this would look like is an ending triangle, which is going to take us up to wave 5. Now, as you can see, this indicates that we'll have a primary wave 1 here. We're going to go lower down and then all the way up. The other scenario, which is pretty much the similar outlook in the short and medium term, we're looking at this as wave C of 4. And that would mean, of course, that we're going to get a wave 5 down in the primary degree, right? So this is again an A, the 1, the 2, the 3, the 4, and the 5. Again, an ending diagonal, right? Oops, excuse me. An ending diagonal again, right? Now, obviously, we might just be wrong, okay? And what would this mean? It would mean for me that this was not a flat, right? We ended a wave 4 up here. This is a 1, 2, 3. We are actually in wave 4 now. And this wave 4 is simply a triangle, right? Because we had A, B, and the C, and we're actually moving down for wave D now. So pay attention to the short term. If we move down from here, we're most likely going for wave D, and this is going to be a triangle. If we move up, most likely we're going for wave 3 of the ending diagonal, okay? Now for gold, well, gold, we do believe as well that I've said for weeks now that we're on wave 4, and I'm expecting another move to the upside. This looks like an ABC to me, right? We did get the 61.8 Fibonacci extension of waves A and B here at 1842. This is looking corrective indeed, right? That's why I call this a wave 4. So I'm looking at this as a W, X, Y, X, and Z, okay? 1, 2, 3, 4, and 5. This is a triple zigzag, and I'm expecting for another move to the downside for wave 5. Now this is going to be, if you take wave 2 and 3 Fibonacci retracement, we are at the 61.8 over here at 1827. So I'm looking at wave 5 to take us down to the 1827. Or we could even go down to the 100 Fibonacci extension of AB, which is coincidentally also the 78.6 Fibonacci retracement of wave 3, right? So a very good cluster. So if we see a move going down, we're looking for 1827, a break takes us to 1760, and then we'll look for prices to move all the way up. So of course, it could be a case where this is an ABC, 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 and ABC. So we could be really heading from some sort of descending triangle as well. The scenarios are, I mean, there can be multiple, but we really have to go with what the price action is really showing us. So thank you very much for tuning in today again. And I would pay attention to those OPEC and IEA reports coming out today, because they're going to give us a very, very, very good indication as to the future whereabouts of the oil prices. Thank you for watching. And if you have any comments or alternative scenario in mind, do not hesitate to comment. I'll get back to you as soon as I can.